All right, traders, I'm going to prepare you to trade the best setups at the best prices. I'm going to show you on how I came up with these key levels, why I'm planning to trade at these key levels, where I'm planning to enter, where I'm going to put my mental stop loss, where I'm going to put my profit targets. This is also going to show you how to determine if the bulls or bears are in control of these key levels. This is going to prepare you to trade the best setups at the best prices. So in terms of my last trading plan on the SPY, as I had clearly stated, if I see the SPY go below this key level, why is this a special key level? Because SPY gapped up. When a stock gaps up, wait for the market to close, take the low of day. Once it goes below the low of day, what's it going to do? It's going to start to fill the gap below because there is no support, right? So I'd clearly stated in the last video that I made, if I see SPY go under this key 385.60 level, I'm going to start playing puts. I played puts twice on SPY. The first time that I bought puts on Friday was right here when it started to crack below my key level. I made a 20% return on same day expirations that were actually a little bit in the money. I went with a 385 strike, 20% return in one single minute. Put $1,000 into the contracts. That's a $200 profit. And then I played puts again. Go back and watch my latest live trading video. I played puts again when it retested 385. For a 70% profit return in 15 minutes. Put $1,000 into the contract, make a $700 profit. The video works absolutely phenomenally because I traded at the key levels, I waited for the reaction, and I waited for the confirmation, and I took advantage of that key level, reacting as a resistance level. So, Will, what is the update? How are we going to trade the best setups at the best prices heading into this week? I'm going to show you the key levels. I'm going to show you how I came up with these key levels, right? So what is the chart telling us? The chart is telling us that the SPY had turned that key special gap breakdown level, which is a support level, but once it cracks and reacts as a resistance level, there is no support. So it's going to start to go back down to fill the gap below. And that's what SPY is in the process of doing. It's in the process of filling this gap. There's a gap to fill below at $374. Remember how we pointed out on the daily chart, how once SPY cracks the support level, it's going to have a big sell-off because history shows it's known for having big sell-offs at that big level. See on the same day right here, it went from 388 all the way down to 375. See on the same day right here, it went from 381 all the way under 374, right? So we take advantage of those big moves. We study the charts, we trade the charts. The charts are going to tell us where the big moves are going to occur, those overreactions, right? So SPY's in the process of filling the gap below. Now, what can flip the trend? What can flip the trend to send SPY micro bullish, right? What can do that? I'm going to explain to you. This is what can change the trend for the micro. So you know what to look for in terms of micro reversals and micro confirmations to not be playing puts. This is what I need you to understand. The pre-market low was right here at $382.50. The previous closing price is at $383.27. Here's what we know. As of now, we know that the SPY turned that key support, that 385, into a resistance level, and it started to sell off to fill the gap. There was a micro rally, and it turned that key 385, which is the first time it retested that 385, into resistance, and it dropped a little bit in after hours. What can flip the trend? This is what can flip the trend. For true strength, this is make or break. The bulls need to break above the previous closing price to flip the trend. They need to quickly rise above 383.27. If they break above 383.27 and it stays green and it holds and reacts to support, there is no reason for puts. What they're going to do is they're going to try to flip the trend. If that occurs, send it to 385. And I don't even want to play puts at 385 again because it already worked twice. I do it at the initial reactions, the initial times. I don't keep on hitting it, right? So what can flip the trend bullish is if it breaks above the previous closing price and turns that into support, absolutely no reason for puts. So if that were to occur, what would be the best level for put options based off the video that I'm making here right now with no further updated price action analysis, which will be updated and changed throughout the week? What would be the best level possible for puts if the bulls flip the trend? The best possible level for puts if the bulls flip the trend would be right here. Your previous support that has not been retested, and there's a gap to fill above for a gap close reversal strategy at $389.63. That would be the best level to wait for. Now, let's discuss the bear territory. For the bear territory and for the bears to remain in control for the micro and for the bears to show true strength, what they need to do tomorrow is, if it goes red to green, no reason for puts. But if you see it go from green to red, where it's above the previous closing price of 383.27, and then it goes red, and you see it breaking down, you can try puts at the lower level if that occurs. For true strength, they need to break below 382.50. They need to turn this pre-market low into a resistance level. If they can do that, then we should see a crack of Friday's lows. And you're probably wondering, well, if it cracks Friday's lows, where's the next support level? So based off the daily chart candlesticks, these are going to be the next support levels. The next support level is right here. The closing price of this candle, $380. If it cracks 380, the next support level is $378. If it cracks 378, big sell off to fill the gap at 374. So if the bears remained in control of the trend for the micro, you see it go green to red, you see it go under 382.50, it's super bearish. What would be the best price for calls for a micro reversal into this week? $374.13 gap close reversal. So automatically best levels possible for calls, 374.13 if the trend remains bearish. If the trend flips bullish, then $383.30 for calls if it flips bullish. Now in terms of puts, what would be the best level for puts if the trend remains micro bearish? 383. If it flips bullish, what's the next best level? 389.63. That's the game. Very, very simple stuff, right? So you know exactly the key levels, what to look for. You know if SPY is breaking above the previous closing price, it's forming a floor, then the bulls are going to show up and they're going to start to break out and they're going to start to try to flip it micro bullish. You know if you see this go from green to red, if you see this under 382.50, then the bears are going to show true strength and they're going to be showing up tomorrow. And then that's the game. And then I also gave you the best key levels if the bulls take control. I gave you the best level for calls right now and the best level for puts in the near future for the next reversal at 389.63, right? And then if the bears show up, I gave you the best levels of true strength right now. And I also gave you the best levels in the future in terms of calls, right? Where the trend can flip if the bears still remain in control for true strength at 374.13. I gave you the best levels. Those are the best levels possible heading into tomorrow, right? Now, what can give us new levels? New levels that cannot be updated as of now would be this. Overreactions. If you see big overreactions, you could play big reversal overreactions. I'm not going to be discussing that. That's all disclosed and updated within Trader Society. But within this video that I'm putting out right now, that is how you trade the best setups at the best prices. If you see it react bullish at those key levels, then you know it's going to be calls for the micro. If you see it reacting bearish at those key levels, you know it's going to be bearish for the micro, right? So you're simply looking to determine, and you want to give it some time. You don't want to rush it. You don't want to get in right away. You want to give it some time to see how it's playing out. Is it struggling at this key level? Is it forming a roof? Is it forming resistance? Is it forming lower highs? Okay, it is, and it's at the key level for puts. Okay, let's play some puts. Is it reacting bullish at this key level? Is it forming a floor? Is it forming higher support? Is it turning previous resistance into support? Okay, it is. Then let's try playing calls, right? Just understand where we are in terms of the market, understand what can flip the market in terms of these key levels that I addressed, and that's the game, man. So heading into tomorrow, your main focus should be this 383.30 to 382.50 zone. You know what to do with it. And then in terms of the future, your focus should be this 389.63 to 374 gap close reversal levels. That's where SPY is going to have some reversals, right? That's going to be the updated price action analysis. That's where the amazing scalping opportunities are going to be made. This is all determined based off the chart, utilizing the best key levels possible where SPY is going to have those big moves. If you're looking for the big moves, if you're looking for the overreactions, those are where they're going to occur heading into tomorrow. It is your job as a trader to determine if it's reacting bullish, if it's reacting bearish. It is your job to adapt and to react to what the market is telling you. You can enter a trade because it's looking bearish, but if it flips, you must react and you must respect your mental stop loss and to not hold. Because if these key levels react against you and you hold against that trend, you will get crushed because you are trading at the most volatile best levels possible. And if you trade against the trend, you will get destroyed. So respect the levels. And if it goes against you and it's not looking good, respect your max pain and get out at that mental stop loss. In terms of my profit targets, in terms of my style trading with the levels that I've given you, I'm a scalper. I'm a scalper. I get in, I get out. I like buying. So for example, if it's looking bearish at 383.20, I go with a 383 out of money strike. I'll be like 10 cents out of the money. And then once it starts to become in the money, I say, okay, what's my targets? Well, 382.50. That's a nice target. Boom. Lock in my gains there. If I want to leave some to ride, then the next support level is towards this 381-ish level. Boom, lock in my gains there. I'm not holding long. I'm playing a barely out of money option. And once it starts to become in the money, I'm scaling out. I'm well aware of my instant sells. Instant sells would be 382.50 and 381, right? I don't want to keep on chasing the trend for lower and lower levels. I don't want to keep on doing that. That's more advanced. I'm trying to put you guys in the best direction possible. You can sit here and trade lower levels, not the best thing to be doing. So like, for example, the daily chart tells us, well, if $380 cracks, it's going to go to 378. So if you see 380 crack, react as a resistance, then, it drops to 378. Once it pops back up to 380, play the puts on the retest, right? That's something else you can do. But I'm trying to show you the best levels to be trading at possible. There are times where I play the levels that aren't as good, but in terms of what you need to understand in terms of all levels, I gave you the levels, right? And the chart's going to tell you everything. The chart's going to tell you everything. So if 383.30 breaks down, reacts as a resistance, it goes to 382.50. What's the level below that? It goes to $381. What's the level below that? $380. What's the level below that? $378. What's the level below that? $375. What's the level below that? Fill the gap at 374. Now, in terms of upside potential, so you can write down all these key micro levels, but remember, trade the best ones, the ones that I said are the best. The micro levels are just going to help you with profit targets and where to be exiting automatically. Now, in terms of your upside potential, if 383.30 breaks out, it's going to go to 385. Above 385, it's going to go to 386.50. Above 386.50, it rockets to fill the gap at 389.63. 389.63 reversal. Boom. That's the game. This is all within the chart. This is simple. It is your job and responsibility to trade with competence, to trade the best key levels as possible. I gave you all the breakdown levels in terms of where it's going to be heading, right? So if those levels react as a resistance, it drops down to the next level. You can't say that it's going to drop 2 levels in advance, only 1 level. If one of those levels reacts as a support, then it goes up to the next level. That's the game, man. I'm going to be wrapping up this video lesson. I hope you enjoyed this and learned a lot. I'm going to continue to absolutely crush it trading at just these red lines on my chart. You want to be competent? Do this. Identify your key levels, set a price alert at your key levels. Do not make a trade based off of a level that is not at your price alert. Set these price alerts. Once your price alert triggers, give it some time. See how it reacts. Okay, it's reacting as a resistance level. It's struggling. It's forming lower highs. Let me try to get in at the best entry possible towards that resistance level on a little pop, right? If you're playing puts. And then the inverse for calls. Okay, it's at my key level where I wanted to buy calls. Okay, it's reacting bullish. It's forming a floor. Let me try to get in right here. Only trade at your key levels. Only trade off your price alerts, wait for confirmation, wait for reaction. There's certain levels that are so good where I don't even use a reaction, use a confirmation. For example, with this strategy, I use the same strategy to bank on puts with the FOMC meeting combined with a gap breakdown. What I did was, this is another strategy that I'm utilizing besides gap close reversals. I wait for SPY to sell off massively. So right here, this was the support level on the SPY. The support level was at 384.50 to 385. I wait for a massive sell-off. When it has the massive sell-off, that's when you know the trend's bearish because it sold off and got absolutely crushed. We also went over the gap breakdown on the daily, right? The gap breakdown on the daily told us it was going to sell off massively if it goes below this level, which is why I played that. And then I played the retest. And the reason why I played the retest, this is part 2 of my strategy. When it retests that first support level after selling off massively, what you need to understand is, you see how SPY is going up from 381 to 385? That's micro bullish. That's short-term bullish. But the fact of the matter is, the macro trend for the day was bearish. It was bearish. So when it goes back up to the first time, right? So I'm not going to be as interested in this level heading into this week because it already played out. It already played out. The first time when the macro trend kicks in bearish like this, and then the micro flips to bullish, the macro trend is going to kick in at that first support level, right before it cracked and had the massive sell-off at that 385. So if it instantly rips up to 385, that's when the macro bearish trend kicks in and the micro little short-term trend is over. And I played puts at that 385 retest because I'm well aware it was the same exact strategy that I used on FOMC. What did I just tell you? I told you, wait for the SPY to have a massive sell-off. Look at the support. 403.50. It cracks 403.50. It sells off all the way to 396.50. It drops over 7 points. So what do? You wait for it to instantly rip back up. This is the micro trend reversing, but remember the overall macro trend for the day, it was overall macro bearish. So what do we do? When it retests that previous support, reacts as a resistance, boom, play the puts automatically. Don't even wait for confirmation. Don't even wait for reaction. Do it the first time only. The key to that working is you need a big sell-off at support, a massive sell-off at support, and then a massive micro reversal to the upside. Previous support reacts as a resistance. That's the game. All the money is made in those overreactions in the volatility, right? You don't have to predict anything. You wait for SPY to have a big sell-off. You wait for the overreaction to occur. All of these bag holders who bought the dip right here are going to be selling when it retests their initial entry because they were just absolutely destroyed when it collapsed, and the stock's going to collapse. That's the game. Wait for the big moves. Wait for the big overreactions. I'm going to wrap it up, man. We're going to absolutely crush it this week. Make sure you guys are subscribed to the channel. I will see you within the next one, man. I'm feeling so much better. The green streak has been absolutely insane, and I'm really starting to heal up from the sickness. I've been sick for a little bit over 2 weeks. Really starting to feel better and heal up. I will see you guys tomorrow live at Market Open within Trader Society. We're going to absolutely crush it. For those of you who are interested in Trader Society, we're going to be reopening up back to the public where you can join within the next 1 to 2 weeks. Stay tuned for the announcement.